I want to take you through the loan process. I want to give you 5 reasons why you should get pre-approved or get a pre-approval before you start shopping for a vehicle. The first reason, you're able to see what you qualify for and stay on plan. I believe a lot of people start the process backwards. They go to a dealership, fall in love with a vehicle, and then they go into the finance office and try to figure out how do we pay for this or what is my payment after you fell in love with the car. And I believe that if you switch that around, get pre-approved first, know what you qualify, and go and look for vehicles that fits within those parameters, you have a better chance of staying on plan rather than getting totally distracted. Now, when you go shopping, you're going to get distracted. There's going to be a lot of flashy cars, a lot of nice cars, and cars that maybe you haven't thought about before. But from a financial standpoint, I believe the pre-approval will help you stay focused, know what you're looking for, or what you need to stay within price-wise, and also it'll help you with the parameters. Like, for example, your credit union or your financial institution may tell you, okay, you're qualified for $25,000, but it needs to be no more than 3 years old, and it needs to be under 60,000 miles, or whatever the case may be. Therefore, you have framework to work through as you're searching for your vehicles. And if anything um, present itself that's outside of those parameters, then you know that you need to keep looking and keep searching. So again, getting pre-qualified, you're able to see what you qualify for, what your interest rate is, and stay on plan. There's some instances that a particular finance director at a dealership may not tell you what your interest rate is up front. They may wait to the very end. But if you know what your interest rate is ahead of time, you may decide, you know what, I don't want to pay that interest. That's not what I want to do. But at least by getting pre approved, you'll know what you're working with ahead of time so you can go and make the process a lot more smoother and easier. Okay, reason number 2, you're able to itemize your deal. I like to separate the financing from the purchasing of the vehicle so I can know exactly, I can itemize what my loan um, payment is and the negotiations and everything on the car. So, for example, if I know I'm pre-approved for 25,000, my interest rate is XYZ. I know that that's itemized. I know exactly if that particular financial institution is selling gap insurance. Let's say it's going for XYZ number. I know exactly what that is. I know the numbers, and I don't have to mix it in with the pricing of the car at the dealership. And I don't know what my payment is until I get back into the finance office and all that. No, I don't have to do that. I know what I'm pre approved for. I can use a calculator that's online, an auto loan calculator, and it can give me an idea of what my payments are and so forth. And then as you're searching for the vehicle and you're at the lot or you're online and you're looking at different vehicles, then you have a better idea of, okay, this vehicle could fall within my parameters. And okay, if I'm inside the dealership, I'm test driving the car, I like the car. Okay, I'm able to focus only on the numbers of selling the car, and they're not mixing in the interest rate and how much money you're putting down. The dealer doesn't need to know how much you're putting down if you are putting a down payment, if you're separating your financing from the actual dealer purchase. So that's why I like to separate it so I can itemize and know exactly what I'm dealing with. Because again, you go into a dealership sometimes, and this is not a negative thing for the dealer. Again, they're in business to make money and to offer a service and a product and so forth. And they want to protect their financing or their money that they're able to make and so forth. And I believe that you should want to protect your finances as well and get the best deal. And once you two come together, then I think a fair deal can be made if everyone is coming to the table and everybody has an understanding, and it's not like lopsided that you're in the dark and you don't know what's going on, but they have all the answers. No, I think it should be even. And I think that if you do this, get pre-approved, itemize it, separate the financing from the car purchase, then I think that'll give you a little bit more confidence when you walk in. Because when you walk into the dealership, you already know that you're pre-approved. You don't have to be questioning like, "Oh, am I going to get pre-approved for this car?" Or what is my interest rate is going to be? Am I going to really be able to afford it? You fall in love with the car, you really like it, but you go back to the finance office and you're a little nervous because you don't know if the payment is going to be high or whatever the case may be. You'll already know some of the answers to that before you even show up at a dealership by getting pre-approved ahead of time. Okay, number 3, you're able to control how many banks pull on your credit. If you go and get pre-approved through one particular financial institution, they're going to pull your credit, and more than likely, they're going to be the only one pulling your credit. Now, if you go into a dealership, they have the capability of shopping your credit to 5 different banks or 10 different banks, and all of them can pull your credit. So if you are going to finance through a dealership, make sure you ask them, how many banks are you sending my information to? And if you only want to limit them to 1 or 2, make sure you let them know that. If not, they're going to shop it around and you're going to get all these hits and pulls on your credit, and it can actually potentially bring your credit down, your score down. So just be careful of that and be mindful of that, and I think you'll be fine. All right, number 4, you're able to jump on opportunities quicker. So let's say you're waiting on a particular vehicle, you've been searching, you've been looking, and you haven't found anything, and then all of a sudden, one day it pops up. When you're pre-approved, you can go ahead and jump on it because all you have to do is provide a bill of sale, a purchase agreement from the dealership to your financial institution who you got pre-approved for, and they can go ahead and do the loan. You don't have to go through the process of going to the dealer, waiting on the bank to come back and all this. You already know what you qualify for. You already know what your interest rate is. You know all that. You know that you're good to go, so you can easily jump on the opportunity much quicker, in my opinion. Number 5, you're able to drive off the lot confidently knowing your loan is closed. I got to tell you a story. There's an individual that I know that this gentleman was at a dealership, and it may have been on a weekend or at night or something, and he had his fiance or girlfriend with him, and all of a sudden, and he shared this with me, and he was looking around at cars, and he saw a car that him and his girlfriend, fiance, they really liked, and I think her mother was there too. And this gentleman was put in, or he put himself in a position that he felt like he had to make a decision on buying a car right then because all the emotions were very high. Everybody, both parties, they wanted to buy the car. The mom, the mother of the girlfriend wanted to buy the car, wanted him to buy the car, and they were excited about, potentially driving off the lot with it and everything with it. So he fell into the temptation of, okay, I gotta please him. I gotta, you know, I gotta go ahead and buy this car to make them happy. He went ahead and signed all the documents and everything, purchased the vehicle, drove off with the car. Everybody's happy, excited, and all. And all of a sudden, he received a call from the dealer and said, I think this was after maybe a couple days, 2 or 3 days or so. I don't know how long it was, but it was probably some days. And they said, "Sir, can you please, come back to the dealership because we need to verify the key on the car and see if the key matches that we have, or something to that matter." And he was a little hesitant. Because he already had keys to the car, but they were like, we need to come in. We need to verify the information on the car and the key, or something like that. Anyhow, he called me and we were talking about it. And automatically I knew he financed with the dealership and something happened with the bank, and they wanted him to bring the car back. They didn't want to create some type of crazy scene, a dramatic scene. That's why they were saying, "Hey, we need to verify something on the car," because they wanted him to bring it back. As they're verifying, then that's when the finance person probably comes out and say, "Hey, I'm sorry. we thought we had you bought by through a particular bank, and the funding didn't go through, so you're gonna have to return the car. So this gentleman actually had to return the car because of the financing fell through. Now, that's not like that in every situation. That's not like that in every case. However, it could happen or it can happen. And that's why I like to say get pre-approved through your local financial institution, like a credit union or bank or small institution or something like that. Get pre-approved independently, because once you're pre-approved and once your loan is closed, once you give the check from the financial institution to the dealership, guess what? The deal is done. As long as you're doing what you need to do, making the payments and different things like that, you should not have to be concerned at all about, oh, am I going to have to return the car? Am I, or whatever the case may be. No, it's done. But that's why I believe it's important to get pre-approved beforehand, so you don't have to deal with that and be in that emotional roller coaster with the finance office. All right. Now, you may ask, well, how do I get pre-approved for an auto loan? What I would encourage you to do is go online, and if you're a member of a credit union, apply to your local credit union, and they should have like a pre-approval form on, or not a pre-approval, but a online application that you can submit your information, and you can easily get decisions. Some financial institutions are very quick. They can let you know in minutes you're pre-approved, or if they need to look at it a little bit more, whatever the case may be, you can easily apply online at most financial institutions. Okay, now let's dive into some questions for your loan officer. Assuming that you've gotten pre-approved and they already told you that, gave you the green light on that. Now it's time to ask some specific questions. And I want you to write these down. I want you to write these down, or you can go back. We may even make this as a PDF printable, or maybe do a PDF sheet that you can just download. But if you don't see a download button or download PDF of the questions, make sure you write this down, because I think these questions are going to be very important for you to make sure that you have the answers to. The first question: do you finance? This is questions for your loan officer. Do you finance 100% of the JD Power retail value? JD Power, they used to be called NADA, and that's where a lot of financial institutions, they use that value system in order to determine what the current retail value price is for vehicles. Now, if you're looking at a new car, you're going to be going off of the MSRP. You're not going to be looking at a JD Power retail value on a new car. You want to focus on MSRP for that. Now, the question again is, do you finance, to your loan officer, do you finance 100% of the JD Power retail value? Let me give you an example. Let's say the JD Power retail value is $15,000, and the dealer that you're looking to buy the vehicle from is selling the vehicle for 14.5. And then your drive out includes taxes and fees. It comes out to be $16,300. Again, this is just an example, made up numbers, but I want to show you this as an example so you can get an understanding. So by asking, your financial institution, do they finance 100% of JD Power retail? That's asking them, hey, if I find a car, and will you go up to the retail price? Some financial institutions may say we only finance 100% of JD Power retail. What does that mean? 100% of the JD Power retail. That means that the retail price is 15,000, the dealer is selling for 14.5, and your drive out is 16.3. Because they're financing up to the JD Power 100% loan to value of the retail price, that's saying that they're not going to finance anything over the retail price, which is 15,000. So if your drive out, so even though the dealer is selling the car for 14.5, your drive out is 16.3. Your financial institution may say, we are not going to finance no more than $15,000. So, what does that mean to you in this situation? If they were to come back and say that, that means you will have to put down a down payment of the difference between 16,300 and 15,000, which is $1,300. So, if you want the vehicle that you picked out, and this is the scenario of the numbers and so forth, they will require you to put $1,300. But a lot of financial institutions will finance over the JD Power retail, including taxes and fees and so forth. They may go 102%, 103, 104, 105, and so forth. So what that means is, let's just say you're buying it for 14.5 and the retail price is 15,000. If I take 15,000 times, let's just say 104%, 104%. 104%, if I take 15,000 times 104%, oh, let me go back just a second. If I take 15,000 times, let's just say 108, 108%. So I'm using my calculator right now. I do 15,000 times 108 and then hit the percent sign. That gives me $16,200. So if your financial institution was willing to go up 108% over retail, that means they will finance up to 16.2 of the retail price. So in this situation, you will still have to put down $100. Some financial institutions will go, let's say they may go 110%. And if they go 110%, if I take 15,000 times 110%, the 110% will come out to 16,500. So therefore, you won't have to put nothing down. If that's the case, you drive out at 16.3 and they're willing to go 110%. So by knowing this information ahead of time, you will know, okay, am I going to have to go in? Am I going to really have to put some money down? I don't know, So by knowing this information, I think you'll be better prepared. Okay. Another question is the auto loan a simple interest auto loan rate or rate? Is the auto loan a simple interest rate loan? A simple auto loan interest rate loan is like a fixed amount. So let's just say your interest rate is 4.9%. Again, I'm just making this up. If I was to take out a loan and I have a simple interest loan of 4.9% or whatever the number may be, I know that let's say for instance, I bought a car today and I decide in 6 months I want to get rid of the car. I'm only paying interest up until the time when I want to trade in the car, rather than paying a 4.9% for the whole term of the loan. No matter if I trade it in earlier, sell it earlier, pay off the loan early. You don't want to be stuck paying interest. Let's say you take out a loan for 72 months, paying interest for that entire time when you are either paying your car off early or you're trading it in. You want to be able to pay the interest up until the time that you pay it off or you trade it in. That's a simple interest loan. Now, if you get anything outside of a simple interest loan, some loans out there I've seen in the past that will make you pay a fixed amount to say, okay, your interest rate is XYZ over the term of 72 months. You're going to pay $5,000 in interest, and you're going to have to pay that no matter what. You don't want to be stuck in that type of situation. You don't want to be stuck having to pay interest no matter how long you keep out the loan or you keep the car. You want to make sure that you have a simple interest loan so you can easily pay off the interest or pay off your loan and your interest up to the date that you're going to sell the car or trade it in or pay it off or whatever the case may be. So keep that in mind, and that will do you well. Okay, here's another question. Is a down payment required? Do you have to put any money down? Ask your loan officer ahead of time. Don't be shocked When you go through the whole process of going to a dealership, finding the car you like, test driving it, filling out all the paperwork, and then all of a sudden your loan officer say, "Oh, you're going to be required to put $1,500 down." Make sure you know if a down payment is required. Also, it would be very helpful to understand, as we just covered a couple slides ago, concerning, do the financial institution finance 100% of the JD Power retail value? How does that work? Then that can let you know if you're going to have to put money down. Find that information out ahead of time so you're not caught in a bad situation, once you find the vehicle that you like and you're ready to move forward. Okay, here's another question. What is the longest loan term that you allow? Some places will let you go 72 months. Some places may go 84 months. Some may go longer than that. You want to be careful of that, but find out what's the longest that you can go. Is 60 months? Is that the longest? Understand what type of terms they offer your financial institution. Some places also, they may say, okay, if you get a 2-year-old and newer vehicle, we'll go XYZ amount of term months in terms. We'll go 72 months. But then if you go with a 5-year-old vehicle, they may only go 60 months. So have that understanding. Ask that question to your loan officer. Are there any mileage restrictions for my auto loan? Sometimes, some places, they may have a restriction to say, we will finance anything that's under 100,000 miles, or we'll finance anything under 120,000 miles. Find that out beforehand, before you start shopping, so you're not wasting time looking at vehicles that are outside of the mileage restrictions and guidelines. So find that out from your loan officer. Here's another question. Do you finance negative equity if a trade is involved? And how does that work? You want to know, and that all ties in, to like the 108%, 110% of JD Power uh, retail value and so forth. Get an understanding of how much they're willing to go over if you have negative equity over retail, if that is the case. That's a very important question to ask. Can a purchase be made from a private owner, franchise, or an independent dealership? Some financial institutions may say, we will not finance from a private owner, or they may say, we will not finance from an independent dealership or used car dealer. We will only finance with a franchise dealer, which is like Toyota or Honda or a Ford dealership. But we won't finance any independent dealers. So find out ahead of time, can you buy from either a private owner, a franchise dealer, or independent? And also, does my rate change if I buy from any of those different places? That's a very important question to ask. How long is the pre-approval good for before it expires? Your loan officer may tell you 30 days, 60 days. Okay, what happens if my loan expires? What do I need to do? Ask that question. How long is my pre-approval good for before it expires? And if it does expire, what is the process? What are the negatives if I was to let it lapse or expire and I have to get pre-approved again? Are there any cons to that? Last question. Can a vehicle be purchased out of state? Some financial institutions will not finance a vehicle that's coming from out of state. So you don't want to fall in love with a vehicle and find the perfect vehicle and then realize your place of financing will not finance that vehicle because it's across state lines. A lot of places will, a lot of financial institutions will finance a vehicle out of state, but there's some that won't. And I've encountered that before. So don't get shocked at the last minute. Find that information out beforehand. So with all that being said, get pre-approved. submit your loan application, and you can save so much time by doing this and taking heed to some of these tips that I've been given and asking your loan officer these questions I've been asking. I think this will help you and it will save you a lot of time.